End of the table and acknowledge board members' attendance. Bernie, we'll start with you.
Bernie Wiegand, board member. Committee member,
John Blacksher, board member.
Rick Kavanaugh, board member.
Kevin Oberg, board member.
Val Romero, audit committee liaison.
We have a quorum then. I don't believe anybody's on Zoom, are they?
Okay, I think we're good. All right.
Okay, I don't believe at this point there are any agenda adjustments unless I'm missing quorum. If seeing there are none, the call to the audience is the next technical item, and there is nobody here to speak directly and or by Zoom, it looks like. So
We've had no call to the audience.
So we can move on from that item. Next item is the approval of minutes of the last audit committee meeting. Anybody want to make a motion and or comments?
I'll move that we accept the minutes.
Second.
All in favor?
Aye.
Unanimously approved. On then to item 5 on the agenda, which is 5.01 annual comprehensive financial report overview from Heinfeld and Meach. So gentlemen, it's your show.
I will defer to Mr. Heinfeld from Heinfeld Meach to present to you the ACFR for you to also ask questions as you see fit. This is a review for you. There is no action being requested. This then will be taken to the governing board for their acceptance. And I just want to say that it's for acceptance and not approval at their March 26th meeting. So if you have questions, but at this point, I will turn it over to Christopher.
Great, thank you very much.
Excuse me, one moment. Can we turn up the volume a little more?
That's what I'm trying to do, Mr. Oberg.
Thank you.
All right. Go ahead, Mr. Heinfeld.
Can you guys hear me okay now?
No.
No.
Okay, what is this doing?
Do you want to move the speakers closer to it?
No, it's not taking the password.
Is it any better right now?
It's not transferring the volume.
I got the volume up at the top. I can hear it now.
What?
Try it now, Mr. Heinfeld.
Can you all hear me okay now?
A little better.
Move you down there.
I can speak closer and shout.
I can hear it. Okay.
Closer to the microphone.
Yeah, Bernie had an idea. How about closer to the mic?
Does now work? Can you guys hear me okay? And I'll just sort of talk loudly and that will work for at least now if you guys want to keep adjusting it.
Can you just give us a second, please? Thank you. No, what I'm saying is put it there and then go to the actual setup and then select the speakers. Because that's what's happening. We could hear it through the speakers of the laptop, but we can't. There you go. Okay, do you mind testing?
Testing.
Do you see the option?
You all don't have to sit together and get closer to, you know, there's an option.
Okay, we have speakers.
Can you hear me now?
Don't count me because I got my ears turned up.
Okay, never mind.
Can you test it again, please?
Testing.
You can just continue if you don't mind.
Yeah, this is terrible when
Go
you're
ahead.
to the board.
All right. So as Ricky mentioned, I'm here to talk to you about the annual comprehensive financial report and give you a brief overview of everything it entails and hopefully answer any questions that you may have. It's a very large document, as in the title. It's very comprehensive and contains a lot of sections. So we'll briefly go over each section and what's included in those. But Ricky, I don't know if you want me to share my screen for the slides I have, or if I should do that.
Yeah, you can go ahead and share.
Okay.
That's as good as I can do. Get this one.
All right, we're going to start on page 1. That's of the introductory section. So this first section of the report is actually unaudited. It just contains some general information. The document on page 1 is what we call the transmittal letter. And it's a letter from management to the board members as well as any readers or citizens that are looking at the financial statements. And it really just talks about the current status of the district, as well as any talks about future projects, whether bonds have been issued, whether they have been authorized or approved, and where that spending may occur. So it's just a narrative, and like I said, a letter from management to the board, as well as other readers of this annual comprehensive financial report, to provide them just some general background information about the district and what general operating procedures they have going on. And then throughout the introductory section, there's a few other items like certificates of awards for financial reporting, your organizational chart, as well as a list of principal officials. But then on page 19, we get to what we call the independent auditor's report. This is a three-page document that details everything that we're providing an opinion on or not providing an opinion on. It also discloses management's responsibilities for the financial statements, as well as the auditor's responsibilities for reviewing and auditing those financial statements. The first 2 paragraphs of this letter really detail exactly what we audited, and that being the governmental activities, the major funds, as well as the non-major funds in aggregate, which we call the basic financial statements, and then the notes to the financial statements as well. The next section starts on page 23, and that really is management's discussion and analysis. So this section is a great section for comparing current year to prior year information. Really just a year-to-year analysis of what's happened at the district over the past year, whether there's been revenue growth and why, whether liabilities have significantly increased and why. And so as you look at page 13, actually I think it starts on page 23, you'll notice some very high-level information about the district. We then get into what the financial statements are, their measurement basis, and then show some condensed financial information and discuss those fluctuations from year to year. We'll also get into information about the individual major fund fluctuations, capital assets, and debt. Now, the information in this specific section is very detailed, and the requirements for it are very specific. In fact, one of the requirements are that you make sure that there is not information included in this section that's not required. The standards related to this required supplementary information are very specific, and those are issued by GASB that this is the information we want in here, and this is the only information we want in here. Whereas the transmittal letter, which we talked a little bit about is a little more broad. There's a few required communications in the transmittal letter, but for the most part, it's up to the district to quote unquote brag about itself or describe what's going on and what are current procedures at the district. A little more open-ended to what can be included in that section of the report. Just a few things to point out. You can see that over the course of the past year, the district had a lot of significant revenue growth, and that was primarily from additional unrestricted state aid, which comprised your state aid and additional state equalization, as well as funding from your classroom site fund and instructional improvement funds. That's probably the most drastic change when we talk about revenues and expenditures. Expenditures increased greatly, just primarily due to salary growth over the last year. And then when we look at assets and liabilities, the big piece is more so related on the liabilities. There was a big increase in the net pension liabilities. We'll discuss that in more detail when we get to that information. The next section I'm going to jump to is what we call the basic financial statements, and this is where we get into audited financial information. The first set of financial statements on page 40 and 41 are looking at the district as a whole. And the first one is your statement of net position, and this is very similar to a balance sheet. It shows your assets and your liabilities. There's some accounts called deferred inflows and deferred outflows of resources, and I think those are pretty specific to governmental accounting, but really relate to assets or liabilities that are being, I should say, revenues or expenditures that are being amortized over a certain period of time, and that's why they're reported as such. On page 41, we have what we call the statement of activities, and that's really your R&E statement. And this probably doesn't look a lot like other public companies, but this is where governmental accounting comes in. The idea is to list all the expenditures of the district to the far left, and then show any revenues associated directly with those expenditures. And you can see those would be usually operating grants and contributions, capital grants and contributions, or charges for services. So the idea is if you have a grant in which you have expenditures for, you match up the revenues related to that expenditure so you can see the total effect on the district. Obviously, the district's going to have more expenditures than they will program revenues, and that's very typical among governmental entities, as this is often subsidized by a lot of general revenues, in which you have property taxes, and at school districts you're going to have state aid, federal aid, those unrestricted items that don't necessarily tie to a specific expenditure purpose, but have been more provided to the district as unrestricted uses. You can see all the financial information in there related to the district. If we jump to page 44, though, this is where we start to fund financial statements. And when we talk about fund financial statements, we're talking about the major funds, which will always be the general fund, and any other fund groupings that meet the threshold requirements to be qualified as a major fund. And all the other funds will be combined as non-major governmental funds. And so you see, we have the general fund, we have federal and state grant funds, and then we have our non-major funds. And that makes up the governmental financial statements for not only the balance sheet, but also the statement of revenues, expenditures, and changes in the fund balance. And the big difference between these statements versus district-wide, government-wide financial statements we were talking about before is that the government-wide financial statements include everything, all district activities, whereas when we look at the fund financial statements, the focus is a lot more near-term or current basis. So there's no capital assets listed, there's no debt listed, there's no pension liabilities. We're really looking at resources that are used for operations in that current year. The nice thing about the fund financial statements, though, is after each fund financial statement, there's what we call reconciliation, and that reconciliation helps the reader tie the fund financial statements to the government-wide financial statements. So on page 45, we have a reconciliation to the balance sheet for the governmental funds, or from the balance sheet of the governmental funds to the statement of net position on your government-wide financial statements. And so you can see we're taking the governmental fund balance at the top, we're adding in capital asset activity, We're adding in some revenues that maybe weren't considered current resource revenues, adding on a lot of other account balances that aren't considered current, whether they be deferred items, deferred inflows, deferred outflows, internal service items, as well as all that debt activity related to compensated absences, finance purchases, leases, pension liabilities, bond liabilities, and then the new standard, which would be SPIDA liabilities. I'm going to jump ahead just so we have time to talk about everything to page 48. And this starts what we call our proprietary fund financial statements, or in the district's case, really focus on just internal service funds. So this would be the Employee Benefits Trust and the Workers' Compensation Trust. These two internal service funds are presented together and show a statement of net position or your balance sheet and a statement of revenues and expenses or your R&E statement. Really presented more on almost a enterprise or business type activity presentation, although even though there's governmental funds and foundation, this is the presentation of these internal service funds. And the unique thing with your proprietary or internal service funds is you'll see there's also a cash flow statement. That's presented on page 50. And so that's going to show strictly looking at cash transactions or cash balances, your cash coming in, your cash going out, whether it relates to operating or investment activities, and then the reconciliation of those cash balances to the actual financial statements they relate to in the previous section. The next section is the notes to the financial statements, and we're still in sort of this group of audited statements and schedules. And the notes really provide detailed information about all the account balances from all the previous statements we just talked about. So if you wanted to know, hey, I see inventory on the district's balance sheet, how is that inventory valued? You would go to page 56. There's a few sentences there about inventory, the valuation method used, and what it contains. Similar, if you wanted more information about capital assets, and we see the capital asset balances on the district's government-wide balance sheet. I want to know more information about the district's capital asset policies, their thresholds, their depreciation methods. Most of that general information is going to be on page 57, but if you really wanted a lot of detailed information, you go to page 65. 65 is going to show you the beginning balances for capital assets, any capital asset acquisitions during the year, any capital asset disposals during the year, and then their ending balance by specific categories. So the financial statements will show depreciable and non-depreciable assets, whereas on page 65 for note 7 of the capital assets, you'll get to see the breakdown for land, construction in progress, land improvements, building improvements, vehicles, furniture, and equipment, the specific depreciation for those items, and then what we call intangible assets related to some of these new GASB standards releases, those intangible assets related to leases, and those intangible assets related to SPIDA. And then a detailed breakdown of where depreciation expense is going by function. So as you can see, a lot of detailed information in the notes. We're going to talk specifically about finance purchases, leases, bonds, just overall changes in liabilities. So we talked about how one of the big fluctuations this year was an increase in liabilities and those long-term liabilities for the districts. And that was talked about in the MD&A and some of those year-to-year comparisons. We looked on page 69, and that's note disclosure 12. You'd see the beginning balances for all these categories of liabilities, and then you'd see what additions there were, and typically this relates to issuances of additional debt, what reductions there were, and that relates to the principal payment on those debts, and then ending balances, as well as what's due within 1 year. Now, the exception is compensated leave. That sort of shows what was earned and used during the year, and then the pension liability is going to just show the net increase or net decrease. And so you can see that the pension liability in itself increased about $91.2 million. And obviously there's some related accounts to that, but for the most part, that was a significant increase that did have an overall impact on the district's net position. As we continue to go through, I just want to point out note 15. Note 15 on page 71 relates to prior period adjustments. And so this note is saying that, you know what, the prior year's ending net position and ending fund balance were adjusted for the current year, and talks about why they were adjusted. So the big increase was due to the implementation of GASB 96, which relates to the SPIDA arrangements, or subscription-based information technology arrangements. And this was something that we briefly talked about, I think, before, in the district implementing a new software system to help track some of these agreements. So that was the big reason for the restatement. There was a small item related to revenue recognition and just making sure revenue was recognized in the proper period. But in terms of the overall financial statements, you can see those numbers have a very minimal impact on some of the ending balances when you're talking about over $300 million in that position. Just a few other sections I wanted to point out. Note 16 just discloses some additional information about the district's internal service funds and the employee benefit trust, as well as the workers' compensation trust. Note 17, probably the longest note by itself in the financial statements, talks about pensions. The organization is the Arizona State Retirement System, and it sort of runs and accounts for the pensions related to the district's employees. And so a lot of this information is just very boilerplate from that entity and how these liabilities are measured and valued. But yeah, obviously a big increase in a lot of people sometimes will ask, well, why did it increase so much? And there's a lot of factors, but the primary reason is most likely just due to interest income and how that is evaluated at the pension level. So ASRS will estimate a pension liability, and part of that estimation is to determine how much investment income they plan to get each year. And if they get lower than that, then the pension liability goes up. If they get a lot more than that, then the pension liability goes down. So a big part of the pension liabilities these days is just contingent on what's going on in the market and those market fluctuations over the past year. And sometimes it's counterintuitive because the pension liabilities are measured 1 year in arrears. And so it may seem like this last year was favorable markets, or 2 years ago was favorable markets, and it should be adjusted, but there's always a year or two delay depending on when things are happening and how they affect that pension liability number. The next section is another required supplementary information section. We were talking about the MD&A before. This is another section where it contains budget schedules for your major funds, including the general fund, as well as some supplemental pension schedules that are required to be reported in there. And so the difference here is in the general fund, the amounts are considered actually non-GAAP, and that's in the third column on page 80. We disclose what the non-GAAP revenues and expenditures are. And the reason they're called non-GAAP is because this fund statement looks at just the M&O fund. It doesn't include all the ancillary funds that the fund financial statements do that are grouped in with the general fund. So GASB requires that anything with an unrestricted fund balance or that has unrestricted revenues cannot be a standalone fund. It must be consolidated with another fund, and in most cases that's the general fund. So you have a lot of funds that are rolling up into the general fund. Just an example would be typically your Impact Aid Fund, Fund 378. That's the federal grants fund, but Impact Aid is considered unrestricted revenue, and therefore that fund rolls up into the general fund on the fund financial statements. But when we present these budget to actual schedules, it's pulled out of here. So this would be true M&O fund activity that's being presented in relation to the budget. There's also a budget to actual schedule presented for the federal and state grants fund. And then you'll have a 2-page schedule of information regarding the net pension liability and the amount of the liability, the district's proportionate share. So the proportionate share is measured each year based on the district's contributions and then allocated by the Arizona State Retirement System. And then it will also display just a nice 10-year trend of contributions over the year. So you can see the change, and it's almost always been an increase in contributions that the district's been required to make related to this net pension liability. If there was any deficiencies or any contributions made less than the required amounts, that would be disclosed in the schedule, but you can see that that hasn't been the case. I'm going to skip ahead to page 85. Page 85 starts what we call supplementary information, and this information is presented even at a more detailed level than we presented the fund financial statements, and the auditors are required to give an in-relationship opinion on these financial statements and schedules. And so on page 89 lists some general fund descriptions for classroom site fund, instructional improvement, food service, as well as a few other funds. But then on page 90, it starts the individual fund information. And so way back when we talked about these fund financial statements and major funds and all the non-major funds aggregated in a total column, this is all those non-major funds that were aggregated. We now present them separately and show their related account balances for the balance sheet as well as the statement of revenues and expenditures. And then following those statements, starting on page 94, are individual budget to actual schedules for each of those individual funds or non-major funds. So just a lot more detail as we continue to go through the report. You start very broad with those government-wide financial statements that include the entire district, and just as we continue to progress through the report, we get more and more detailed information on funds and individual funds. If you get to page 102, we get to more detailed information about those internal service funds. Previously in the basic financial statements, they were presented combined. Here they're presented individually, so you can see the individual activity and account balances for the Employee Benefit Trust, as well as the Workers' Compensation Trust Fund. And then the last section of the report, and to be honest, even though it's unaudited, I know a lot of readers find it the most useful or interesting because it shows 10-year trend information for the last 10 years for not just financial statement data, but other types of information. So this last section is called the statistical section. Like I mentioned, it's unaudited, but it does have a lot of really good information. So page 107 starts, and it shows a breakdown of the net position from the district's government-wide statement of net position. And then it shows it for the next 10 years, and you can see how it's changed. I think one of the big factors we look at is you look at 2014 in all the district's categories of net position, whether it be unrestricted, restricted, or net investment in capital assets, they're all positive. But then in 2015, all of a sudden you started big negative unrestricted net position balance, and that was caused by GASB Statement 68, in which required all governmental entities to start bringing on these net pension or net OPEB liabilities or assets that relate to government plans. And so if you look at the district's financial statements, there's I think an unrestricted net position of about $218 million. However, 400 plus million of that is probably related to the net pension liability. So that one piece can have a drastic effect on how net position is viewed at the district level. But then as you continue to go through these pages, page 108 starts a 2-page 5-year trend of government-wide expenses and program income. Page 110 shows general revenues for the last 10 years, as well as changes in that position. We then get into the governmental fund financial information and their fund balance, as well as a breakdown even more detailed than the financial statements for the revenue categories starting on page 114. A really detailed breakdown of what are the major federal grants and how they've changed over the last 10 years, or state sources of revenue as well as local sources, including fluctuations in property taxes. You can see what's happened with property taxes the last 10 years. And then on page 16, contra to the revenues, we have the expenditure breakdowns for the governmental funds, as well as any other financing activity. And then the rest of the statistical section really focuses on some of that maybe non-financial information. And so we start into what we call revenue capacity, and we look at how the net assessed value or net full cash value of the district's property has changed over the last 10 years. So that's on page 119 and 120, and the breakdown of that, or the percent of it, on page 21. And then we get into direct and overlapping property taxes and the district's principal property tax payers on page 122 and 23. And then just more detailed information about the district's property tax levies and collections, as well as debt amounts and debt outstanding on the following 2 pages, on page 124 and 25. Really start getting into the district's debt capacity and debt ratios on 26 and 27. And on page 27, you can see where the district has been the last 10 years in terms of its debt capacity, how much debt it's allowed to incur or is authorized to levy in some instances. And this past year, the district's levied 6% of that debt capacity. So there's 94% left out there that the district could potentially go out and get authorized for bonds to be issued. And then we really start just getting into some operational, demographic, economic stats over the next several pages, whether it be at the county-wide level or the district level. And then really close it out with just a comparison of how some of these ratios look over year to year on page 132, looking at total expenditures and operating expenses and per pupil costs, as well as teaching staff per pupil, and some of those other ratios that users of the financial statements may find interesting. So I know that was a lot. It's a 134-page document, and to be honest, I think a lot's been done to condense these reports. I think a lot of the reports used to be closer to 150, 160 pages, but as I said, it's a very comprehensive report over a lot of other matters besides just financial information. But at this point, I'll open it up to any questions, concerns. You're looking at something and you just need some more background information. Hopefully I can provide that.
Bernie, John, Ray?
Well, my concern is, why did it take 9 months to do this? But I'm sure we'll find out about that over a period of time. To me, it's not acceptable to take 9 months to close the books on a school district. It should be done in somewhere less than a month to 45 days. So we need to understand the issues that got us to this point where it's 9 months into the next year when the financial statements finally are audited.
And how would you respond to that comment by John relative to the length of time?
Yeah, I mean, so we're not just obviously talking about closing the books, but performing the entire audit to get to this point. And we're really doing 3 different audits as we go through here. We're auditing the financial statements. We're doing what we call a single audit as well, which report will probably be issued in the next month, as well as a USFR compliance questionnaire that will also be issued in the next month. I think a big part of it, though, was just a delay in the start. I think if you look at the timing of these, normally it takes the district until about October 15th to close out its books. And so the annual financial report is required by the district to be due October 15th, so most districts don't finalize or close out their books until that date. Now, typically, we'd like to issue the financial statements by the end of December after that. So I think that gets into, you're looking at that time frame. That's about 45 days after the close of the books. And I think that's very reasonable and based on a report this large, very, very typical. I think it's just getting back to that normal process of getting the books closed and getting the audit completed by the end of the year. But I'll turn it over to Ricky as well because he can probably speak on it too.
Yeah, I mean, and to tack on to what Chris was mentioning, it's not uncommon for governments our size to issue usually in the late fall, early spring. The city of Tucson, for example, which has a budget that is double our size, issued their comprehensive annual or their ACFR on January 16th. They close the fiscal year on the same day that we do. So this is not an uncommon process. There are multiple audits that are occurring at the same time. There's a compliance questionnaire required by the Auditor General, a single audit required by the federal government, the ACFR that's required not only by statute, but is also required by our bond investors. So all three run concurrently. As Christopher mentioned, in our contract with our auditors, we ask that a draft of this report be issued no later than December 31st. But again, this was that 1 year where we are running between one auditor and the next. We are not allowed to start an auditor's contract until the Auditor General approves it on or after July 1. We are not allowed to engage with our audit firm based on the audit committee's charter until the audit committee approves the engagement letter, which did not take place until the second week of August. So just in the ministerial components of trying to conduct an audit, we lost 45 days. Normally they would have started in the month of May, and they would have been done by December. Moreover, the October 15th deadline is reliant on the ability of the Auditor General to issue their forms that we're by statute required to use to close our books, the annual financial report. They didn't issue those forms until the end of September. This was 1 year where every single school district in the state was rapping at the door asking for these forms, to the point that the current state legislature is making statutory changes to deadlines on the Auditor General as to when they will issue those forms to prevent delays in the future so that we can close our books on or before October 15th. So there are components that are out of the district's hands, especially when you're a government our size. Moreover, we implemented an additional GASB promulgation, GASB 96 on the SPIAs, that we didn't have in the past. So every time we have to implement a new GASB, that it requires additional work. So it's not an excuse, but there is a rationale. There's a rational explanation for why this took place.
So is our goal for this current fiscal year to have something on October 15th?
No, we will close the books by October 15th because that's what statute says that we have to do. If we can do it before October 15th, we certainly will do that. But we won't do it any later than October 15th because statute says that we have to issue an AFR, which is independent of the ACFR, by October 15th.
Okay, so the goal is to have some good numbers by October 15th.
Yes, sir.
All right.
And then to sort of tack on to that, I think the goal would then be to ensure that the financial statements and the ACFR is issued by the end of December, which would be anywhere between maybe, hopefully, within 60 days after that date. Hopefully, we're not working up until December 31st. Hopefully, it's December 15th, and it's been 60 days after the close of the books. But we'll just have to see how next year plays out, and hopefully it's a lot better. And hopefully it's one of those years where maybe the ACFR gets issued December 1st. It's always a possibility.
your concerns.
Anybody have any other, directional questions? Got 135 pages of data, so.
Yeah, I think it's unrealistic to sit here and discuss this in
Yeah.
any detail without having seen it prior to this meeting. So I would defer until I've got a chance to look through it, and we just hear hit and miss, and I think that'd be a waste of our time until we have time to actually look at it in more detail.
All right, then would it be realistic for each of us to say that we would like to put this back on the agenda 30 days from today so that individually we'd have an opportunity to look at it, digest it, possibly ask questions of Ricky before the meeting, and then have a real discussion next month?
Yeah, I think that makes a lot of sense.
Makes a lot of sense.
All right, all right, so, we're gonna reschedule then another discussion, and hopefully both you gentlemen will be available a month from today, and we'll make it the first item on the agenda to discuss any questions or issues through our individual, study that we come up with.
I do want to disclose one thing, so I will, especially since Mr. Romero's in the room, I will ask the superintendent to postpone the acceptance. We'll notify whoever we have to notify that the governing board will not meet its deadline to accept this audit report by the 31st of March. And also, I will still submit this draft in its draft format to our bond investors, because I can't negotiate. I have to get that to Emma, which is the electronic municipal management filing. Otherwise, we won't be able to issue bonds next month.
I don't think we need to be that drastic about our questions.
Right.
I think that we have a CPA sign off on this. You've signed off on this. You're responsible for it. You own the financial statements. The CPA has said they're reasonably correct. We'll just have some questions to follow up. We don't need to delay what goes to the overall board, because let's get this train moving.
Yeah, I think John's got the appropriate comment there. We just want to make sure we get to have input and get our questions answered. We do not want to delay this process any more than it already has been.
I appreciate that, especially Mr. Blackshire for making that statement, because that's exactly what I wanted to know. Because the original statement sounded like you weren't going to get any kind of.
I move that we accept the report, and we'll have questions next month about the report, and it'll be for processing for next year, so this year.
All right.
I'll defer to Yolanda or to Tanya, because this is not set up as an action item tonight. I wish you kind of worded that, Mr. Blackshire.
Is there a
It's actually
second to John's motion?
What he's saying is, you can't take a motion, there's not,
I
the
didn't-
agenda doesn't provide for an action item to occur.
We don't have to do an action item.
Oh, we don't have to do anything.
We don't have to do anything.
Okay, so we're merely not objecting to it moving forward.
Right.
Okay.
Yeah, your direction is enough.
All right.
Your direction is probably.
Everybody agree?
Well, recognize though, the charter does provide for that the committee would make a recommendation on the acceptance of this document to the board.
All right, John, then, would you like to
Well,
restate?
you can't, there's no provision in this agenda item to have an action. I wish we had the attorney. I don't understand why the attorney is not present in this meeting and the last meeting to further clarify that point.
Mr. Ross said that he would only be present at the request of the audit committee, as there are multiple committee meetings that take place during the month. So if you need him, he would be here.
Okay.
But
So we'll just live with the way it is. We're not having an opinion,
Yes,
but you keep driving. Get it to the bondholders, get it to the overall board, and we'll ask questions later, and that's okay with me.
Yeah, it'll be on the agenda for next month for our discussion, period.
We'll take that direction, we'll keep everything
So I got my light reading.
moving forward.
All of us do.
I'm getting some clarification from Yolanda because the item is under study action.
Study information.
Oh, okay. Thank you, Yolanda. All right, we can move on.
All right,
Thank you,
thank you,
Chris.
thank you all audit committee members. Obviously, I just want to reiterate what Ricky was saying. We were sort of stuck between a transition of auditors, and we really hope that this process is a lot smoother next year and that we provided a draft well in advance so that questions next year are asked at the audit committee meeting before the approval to the board. And then I would just ask that maybe in developing next meeting's agenda, you just consider including the approval of the engagement letter on that, as we had previously discussed, to help ensure that we get back on track in terms of getting.
When will we have a copy of the proposed engagement?
I believe we can probably have one drafted in the next 2 weeks. We can probably have something to by the beginning of April.
So we'll get that to you in advance of the meeting so that we can agendize this as a study action item for your approval and consideration of the engagement letter. And if you all give me the go ahead to approve it at that time, we can start auditing in May. So that would be our goal.
That's the plan.
Yes, sir.
All right, thank you all for your time. I appreciate you allowing me to be here and speak on behalf of our firm and about the annual comprehensive financial report for the TUSD school district. And hope you all have a great rest of your day.
Thank you, same to you. All right, then without objection, we'll go to item 5.02, the update and the status report from the internal auditor. Who would that be?
Good afternoon, everybody.
Good afternoon.
Just, there isn't really much that has changed between the last time that we met and today. I completed one accounts payable, yay, internal audit. Thank you. The memorandum was sent out. I didn't receive any comments or any feedback from that memo. It was very general. The purpose of a memorandum is basically to state this is a completion, and it shows a bird's eye view as much as possible as far as when it started, what transpired, and how everything was concluded and what took place. And again, sometimes I tell the auditee that that's the beginning of, or that's the end of an audit just for the beginning of the next audit, because in reality we start and then we do a lot of follow-ups, and then it's just a couple of years later you're going to be in an audit anyway. So it's the beginning of, or is the end of a new beginning of a new audit. But right now I don't have any plans on going back to the accounts payable as of right now, but that could change in 6 months. The current audit that I am doing is the attendance audit, and that is per school sites. There's 89 schools, so obviously I just took a sample. The sample was included of 20 schools, and that was a mixture of elementary schools all the way to high schools. High schools obviously being the ones that have the biggest variety of attendance and how they do it. I'm not going to get into the details of what I found so far because I'm still just analyzing the data that I received, but I am hoping that to have the exit meeting with the auditee between the 1st and the 5th of the month of April. A request has already been sent out stating, hey, this is when I would like to have the exit meeting, just coordinated. There's 3 individuals, so they need to coordinate amongst themselves, and hopefully that will come to fruition in the next couple of weeks. Currently, I have an invitation out for 2 Yeah, 2 departments. That would be the school communities to do a follow-up on them. And then the school safety. I heard back from the community schools. I have not heard back from school safety. That's not really uncommon. So my follow-up is going to be tomorrow and it's going to include their supervisor. That's just the next step. And that's just how it looks. And then after that, I have 2 remaining audits, and that would be exceptional education. They would be started somewhere around the 15th of April. And then the very last one for the school year is going to be the educational diversity and inclusiveness, EDI. Any questions on that? Yes, sir.
So, I know you're taking a sample of the attendance. How do we track attendance for Cole and Tuba?
They're very different because they're not under the same umbrella.
Cole and Tuba are like our online classes.
And they're not supervised under the same individuals that I'm auditing right now. They were included in my audit, or they were going to be included up until I found out during the entrance meeting that they do not get the same kind of treatment nor the same trackability that all the other sites do. They're different systems. So I figured that they earned that right to be selected exclusively for their own little audit.
Okay.
So yeah, that's going to be conducted on their own.
And then just one more, because I know there's 3 other schools that are unique. Mary Meredith, Project Moore, and CAP.
Correct. All of those will be lumped into their own little audits.
Okay.
And by that, I mean all 5 of those, because there will be 2 different systems, the Tuba and the Cole, and then there'll be the other 3. So I'm able to do those 5, all on their own little audit. Okay. And let's see what else we have. Oh, I did do one little thing that I decided to kind of clean up, and I don't know if you could see the little item that was attached to 5.2. But what it is the updated worksheet. I have gone ahead and added 3 little items to the very bottom of it, and it had to do with old audits. And the reason why I did that is because, number one, they were done from the previous auditor, and there was nothing left behind for me to be able to sink my teeth in it and be able to say, hey, you know what, I could go ahead and follow up on these items and feel comfortable that whatever it is that I'm following up on is something that I can substantiate. I was not able to do that, so what I have decided to do is I took the auctions and internal controls for the furniture and the asset management, and I, in essence, lumped them in with the asset management when I did that audit. So there's no reason for it to continue to be open up there when it was already included in the last audit that I did for the asset management. I did the same thing with technology services, which is also internal controls on the furniture. The people that do the asset management also go ahead and supervise the asset management for the schools and technology, and it happens to be a technology individual, so it just makes sense to went ahead and include it in that same audit, which is what happened. And then the last one was the technology services, which addressed Title I. And all that really was the previous auditor went ahead and put a little Title I excerpt. That was it. That's all he had as far as the audit went. So that one was addressed also when I did the employee relations, which was pretty much Title I. And at the same token, I had already audited the grants department, which also includes Title I. So I figured that rather than have 3 lingering items, I just went ahead and combine them and put them as closed and wrapped up into the other audits that are currently being in existence. Those I can substantiate. The ones that were done by the previous auditor, I have nothing to be able to substantiate. So I like things that I could point out as this is why this is an issue instead of somebody's opinion said that it was an issue. So I'm following up here, but I have no idea what they were looking at. So
it's good for efficiency, certainly. We make a note in the later audits that they're covering these pieces.
Usually what happens is when I did the other audits, it was something that was part of the conversation that I had with the management. Okay. And then that also gets included as part of the completion. Once they are completed, they're rolled in. So yeah, it's an ongoing little process until they close, but yes, there is sufficient notation there.
I think it makes good sense, particularly rather than having things sitting there forever. It's cleaned up and that's really a sense of accomplishment that we get them somewhere.
Yeah.
Things are just sitting there.
Yeah. Well, especially because, like I said, they're very old, and I don't like things to sit longer than they have to. There's already enough of an issue with trying to follow up and be able to stay ahead of that game by itself. So right now I have 16 open audits that I'm still going through. Some
And
of
that's
them,
over what time frame? Those 16 will be over?
4.5 years.
4.5 years.
Yes,
And
sir.
that was scheduled under what program or procedure? Quote, 4.5 years worth of audits, is
Oh,
it?
no, that's just the rolling audits. That's just every
That's-
year it starts over. And what happens is
It's like
that,
repainting the Golden Gate Bridge?
oh, no,
You get
kind
to
of,
the-
not really. What happens is that, like, when I started, I did the risk assessment to go ahead and say, hey, this is the plan of who I'm going to be auditing. It's an audit plan for the year, it's
Right.
based on the risk. That stands by itself on the school year. And then during that year, like right now, I've accomplished 4 or 5 audits and I have 2 left, okay? Then that stands by itself. But that doesn't mean that the 3 years before that or 4 years before that of those audits, they just keep on rolling as follow-up audits until they close. So if we take the accounts payable one, the accounts payable was started in 2022. It ended on April 25th, but it's been open since April 25 of 2022. And then a year later, I did a follow-up, so 23. And then a year later, I do another follow-up, so that's another year. And so that's why it keeps on rolling. And so when it closed, it had been already 3 follow-ups until it had finally closed.
Yeah, there were issues outstanding when the audit report was issued. And this is the follow-up on those issues to see what progress has been made.
Correct. So it starts as a general audit, and then at the conclusion of that audit, there's an understanding by management that, hey, I'm going to be doing a follow-up audit based on the findings that are here, and you tell me how soon before, or how long will it take you to go ahead and complete these and implement them and correct them. And then they'll say, well, I don't know, take us 6 months to do this many, another 8 months to do this other, and then we'll come to a consensus of, okay, in 9 months, we'll go ahead and do a follow-up audit. So when I do the follow-up audit, I'm looking at exactly the same thing that I looked at the original findings, except that with new data to verify that it has transitioned into something better or it has improved. So every time that I do a follow-up audit, and the goal is to only have 3 of them before I go ahead and close an audit and completely issue a memorandum of completion.
Mhm.
And that way I could see the progress of what hasn't been implemented and what is still outstanding. So that's why I have 16 going right now, because I completed that many audits and there's still levels that need to be closed or issues that have not been closed.
And then when you come up with your annual scheduling, just kind of tie this all back together, how is that driven then, kind of on an annual basis along with the fiscal year? Or is that nothing to do with it?
No, not really, no.
Not really,
No.
okay.
What happens is that I try to go ahead, which I already issued, I already sent out the annual audit plan. I sent it out about a month ago. And the reason why I sent it out is because I ended up adding the EDI audit, and that was a change. I ended up taking off the project management, and I can't remember what other audit, but I ended up taking 2 off and added the exceptional education and the EDI audit, because they seem to be more pertinent, also given the fact that we're going to be moving hopefully to another building. Project management, and purchasing, which was contracting, they were going to be tied up with all these things that have to do with the move.
Right,
And it wouldn't have been a good time to audit them. So I went ahead and modified the annual plan and added the ones that I felt that needed or that had enough of a high risk, and added those 2, and that's why I issued the annual risk plan ahead of the schedule, which is normally May 1st. But I issued it, I think it was like February 15th or something weird.
mhm,
And on those, it's based on risk, and it has 5 elements of each. It has to do with impact, it has to do with probability of something happening, and then it's just kind of reviewing what and where and how is this going to impact the district. That gets set into, these are the audits that I'm going to be proposing to go ahead and do for the next year. I give it to you guys for your to review. I give it to the superintendent for his feedback, and I give it to the governing board as well. So there's enough people out there that receive this this document to be able to provide me feedback and say, hey, Martha, I don't think that that is the best idea. Maybe do this one. So that's where we're at. Right now it's out there for review. I haven't received anything from anybody stating that, hey, this is a good idea or this is not a good idea. Most of the time, I just do it based on the risk and based on my experience of what I have seen or what I see. A lot of the information that I get happens to be from the governing board during the governing board meetings. Because I'll see things that, oh my goodness, that seems to be an issue. I'll dig a little bit more into it and all of a sudden I'll be like, yeah, that's worth checking out, or no, it's not. So yeah, the audit committee has a lot of say as far as where and how and what audits will I go ahead and review. Once they're completed and once they're done, then I'm pretty much back on my own. I'm reviewing and verifying that things that were agreed upon by management with internal audit are moving forward. But every time is giving the opportunity to management to say, hey, how long do you think it'll take you? Great. So that way, 6 months from now, 7 months from now, if they're saying, well, we didn't have enough time, I keep an open door as far as for their communication to tell me we're going to need more time, or no, this is not working out, or we just decided that this is not going to be something that we're going to go ahead and fix. And if that is the case, then that's fine. I just need to understand why is it that you're not going to be fixing that? Where is it that we're not agreeing? And then if we continue to not agree on something, that's fine too. I'll just write it down, and on that memo, you'll see all of the transitions of the conversation.
I think that's key for accountability, where,
Yeah,
and with your audit plan, there are X number of new audits in any given year, but equally, I think, important are the follow-ups for the accountability. If you said you were going to do this by this date, did you do it? And I think that really, at some point, is, even for the closure of, we solved those issues. And so that department, that's kind of like the accounts payable is probably the best example recently. The follow-up, it'd be great if you didn't have 3 years, but that's what needs to be tightened up, is that when people agree to a particular time frame, and if there's not some incentive or some penalty for not complying with that, which I don't think there currently is.
No, the closest that I come is that I communicate with the superintendent and just let them know that, hey, if I do 3, and also I tell management during my visit, you have 3 times that I get to visit you. And if they're telling me, well, 2 years from now, then I'm just going to say, no, that's not going to work. You have to tell me how far in advance or what items can you complete in what length of time. And then what I usually share with them is that, after my 3rd visit, if I don't see any progress, then I'm just going to give it to the superintendent and they'll decide how to move forward. It's not my job to go ahead and hold management up saying, hey, this is what you have to do. That's not my job. My job is to say, hey, these are the issues. If management is willing to accept them and not do anything about them, all I could do is say, superintendent, are you aware that this is what's happening and they're not doing anything? And if at that point, the superintendent says nothing, or emails me back and says, yeah, then that's my closure. At that point, I'm just like, there you go, move on, and put it back on the risk, because that's still a risk.
right.
And one of the ones that is currently open with no management responses is the grants audit. I issued a memo stating there has been no responses. It was supposed to be provided to the audit committee and the governing board directly, and never was, and still isn't, and that's just the way it is. And all I could do is just document it and move forward. And again, it's just going to be put back if I don't hear anything back within 30 to 90 days, I'll put it back into circulation, audit it again. Just the world auditing.